If you put all your money in just one place, stocks or gold or even a fixed deposit, you are taking a risk you don't need to take. Today we are talking about the one concept that decides whether your money grows safely or grows shakily. This is asset allocation. Asset allocation simply means how you split your money across different types of investments, not which stock to buy, not which mutual fund is best. It's a bigger question. How much of your money goes into equity, how much into debt, how much into gold, and how much you keep as cash. Think of it like a thali. You don't fill your plate with only rice. You balance it with dal, sabzi, and roti. Your money needs that same balance. Here's why this matters more than picking the best stock. Different asset classes behave differently at different times. When the stock market falls, gold often holds steady or even rises. When markets are booming, equity gives the highest returns, but debt stays calm and safe. If your money is spread across these, one bad year in equity doesn't wipe out your savings. Research consistently shows that most of your long-term returns come not from which specific fund or stock you pick, but from how you allocate across asset classes in the first place. Let's keep this simple. There are 4 asset classes most Indian investors should know. Equity. Stocks and equity mutual funds. Higher growth, higher risk. Debt. Fixed deposits, bonds, debt mutual funds. Stable, lower risk. Gold. A hedge against inflation and market crashes. Cash. For emergencies, kept in savings accounts or liquid funds. So how much should go where? It depends on 2 things, your age and your goals. A common starting rule, subtract your age from 100. That's roughly the percentage you could consider for equity. So at age 30, that's around 70% equity, and the rest in debt and gold. But this is just a starting point, not a fixed rule. If you have a goal 5 years away, like buying a house, you'd keep more in debt. If you're investing for retirement 25 years from now, you can afford to take more equity risk. Asset allocation isn't about chasing the highest return. It's about building a mix that lets you sleep peacefully, even when markets don't. Try our free asset allocation calculator on dhanhelp.in and find the mix that fits your goals. If this helped, subscribe to Dhan Help for more simple personal finance videos made for Indian investors.